Have a great crowd for you tonight. I have recurring people who have been here last week, and we also have some new members here too as well. And I'm just going to start it with a nice drink there. A little audible.
Cracked right in the mic.
Mm-hmm. Mouth just got really dry from that protein bar that I had. But anyway, I'm joined here by some new members, some old members. I'm going to start with the new members first. About me, about my background, my name is Salvatore Buscemi. I manage with my partner a multifamily office called Brahmin Partners. We invest into world-class companies that have pedigreed founders, experienced founders that have had exits, and also Class A real estate. I'm also the author of 3 books. My latest book, Investing Legacy: How the 0.001% Invests, gives a deeper impact and view into exactly what the biases are for larger families when it comes to investing into certain asset classes versus the middle class. And that is available on Amazon. I am here with some close friends that we all came together. We had quite a conversation on the suburban Lyft ride or the Uber ride down up to Boca from Miami. I am joined to the left of me right now, or to your right, by the OG boss babe herself, Alyssa DeMartino. Alyssa from New York, lives in Miami. Tell us a little bit about yourself.
Thank you, Sal.
I'm
excited to be here today. This is my first ever in-person podcast. So very excited, very monumental. Really good to connect with everyone that's watching. I'm Alyssa DeMartino. I work for the Baldwin Group. It's an insurance and surety brokerage. I am dedicated to the commercial real estate development and construction division. And so what I do, my specialty, is really connecting our clients to capital solutions as part of our value add service. We want to make sure that our clients and their projects are fully covered and insured. But beyond that, it's really about networking and making sure that we're really taking care of our clients in, all aspects. So a little bit about me. Should I kick it off, or do you want to?
I think on that point, you must see a lot in Miami, right, with developers, because that's a very topsy-turvy business. I'm sure you have a lot of stories that we can discuss later with that. That seems like something out of an episode of Miami Vice, which I started recently watching when I can't fall asleep on Netflix. A new person a newer entrant, commercial real estate, 4th generation family office from Philadelphia. That is Mr. James Korman. James Korman's over here. James, welcome to Funding Fridays on the Owwll app. Tell us a little bit about yourself.
Thanks for having me. It's great to be here, Sal. Thanks for watching, you guys. James Korman, basically a landlord that's grown into a large landlord, and now I'm trying to climb the ladder into putting together the deals and doing them direct with high net worth individuals and families. And I'll tell you, being in that world is a lot more fun than being in the institutional world.
Oh, yeah.
A lot more fun. So
it's amazing. And then last but not least, perhaps the most consequential member of this group is Professor Walter O'Leary. Walter O'Leary is a fellow Goldman Sachs alum. I've gotten to know him very well. He's someone who I respect very much and share a lot of, insights. We go back and forth as it relates to the deals that we're in together or maybe thinking about. And he adds a tremendous amount of value here. Welcome back, Walter. Thank you.
Thank you. And good Friday to you all. A little bit of background. I've worked on, give you just a little teaser. I did the first round for a company that you will probably see an IPO very soon called Quantinium. In the quantum software space. I did the first round of a company that merged with Honeywell, and then Honeywell spun off that business. Also helped start a cybersecurity company by the name of Sigberis that we got some really good traction with some of the channel partners, MSSPs. And right now I'm pretty much involved in data centers. We're aggregating power between 10 and 20 megawatts and just servicing AI, ML clients and doing some mining as well throughout the U.S. As Sal mentioned, I'm an adjunct faculty at I teach the fintech class, so I'm also a big fan of anything that's digital assets and revolutionizing the whole financial sector, shadow banking. So I'm quite excited to be here and to share some of things that I've learned throughout my career. And I'm here to really provide some sounding board, because I think there's a lot of misinformation and misguidance out there. And I think that with experience, you'll be at least pointed in the right direction. And it's up to you to do your homework. I say, if there's one thing you need to work on for the rest of your lives, to be critical thinkers.
Yes. And nobody epitomizes that more than you.
Wow.
It's interesting. As we heard last episode, which is amazing. And thank you for coming back too. I know it's a hike. One of the things that's very interesting is that I talked to people a lot today, and we're in Shark Tank Nation, and everybody's got a side gig of raising money for something. I don't know if anybody's noticed that, but it's become even more acute here in Miami, where everybody comes down here, and it's probably like a legacy, I think, of the crypto, coming out of the pandemic, coming out of the NFTs. I think, and Walter, maybe you know this better than I do. There's probably more people trying to raise funds privately than there are grains of sand on Miami Beach. Or at least probably, double the listed traded stocks on both the NASDAQ and the NYSE. What do you think? What do you think attributes to that today?
Well, I'll tell you what is one of my pet peeves, and this I think will hit home, which is I'm often approached and I'm asked, "Can you help me raise money? And can you introduce me to investors?" And I say, you need to really know exactly what you want out of investors and what you're offering investors, because if you don't, then it's very difficult for anyone to be able to help you. I equate that to a relationship. What is it that you can offer to a relationship, and what is it that you want in a relationship? So unless you have that crystal laser focus on what exactly is it that you want out of capital and what you want the investor to look like, because you are marrying that investor,
Yes.
he or she will be on your cap table forever and ever. Whether that's good or bad will really depend on what you exactly want out of it, your expectations. So unless you really know that, you can't ask someone to help you, because we can't understand what your business is like and what exactly you're looking for capital to do to you. I mean, there's a lot to say in this day and age about doing a bootstrap, because if you don't do that early product market fit, you're basically wasting investors' money. And you cannot, first of all, investors are very sensitive. There's a risk off in this environment, and they're very sensitive to anyone wasting money. So unless you do that initial legwork and show some revenue, show some LOIs, no one's really going to invest in you. Unlike, for example, Sal, he invests in multi-founding experienced founders. And so unless you have experience under your belt and your name can attract capital, you really need to show first before the money comes in.
Yeah, I agree with that. And I think the corollary analogy to that is that capital's a commodity today, and you don't want everybody's check, right? With all due respect, I'm sure a lot of founders wouldn't want you on their cap table because you call them every day. I know the kind of guy that you are, but I think, that's fine for a guy like me. If there's, something going on, I can appreciate that. But you have to understand too, people invest for different reasons sometimes. And then they do think that their investment is liquid and they can get out of it. But really it's a marriage. You got to court these people like marriage. You got to treat them like you're continuing the relationship. Like we took one of our big investors out to dinner for her birthday. You got to continue the romance with this. And I think that's important. And coming out of, NFT, when everybody was sneaking into your DMs trying to sell you something, that's much more transactional. And today is much more relational. But I will end by saying this. Do not be very careful of people who want to make an investment and be hands-on, because that could ruin the culture and really spoil things really quickly. There's a lot of people I know who wanted to invest in companies for like $200,000, and they're like, well, I'm kind of hands-on. I'm like, well, this founder is on his 18th exit and 8th unicorn. So he knows what he's doing, and he's got plenty of talent there. Otherwise, we would not have been able to invest a lot of money. So be careful about who you let into your culture. Alyssa, I'm sure you have some more stories.
Yeah, absolutely. I think the most important thing too is due diligence. Doing the due diligence on the opportunity, on the investor is, and we were talking about this today on the way up, really know who you are, excuse my language, but getting into bed with, I don't know.
No, it's true. Yeah.
You know what I mean? Yeah. And like you said, it is a marriage and it is very long-term, and you don't want to burn bridges, right? So it's very, very delicate, the relationships. So I was, definitely advised to pay very special attention on the due diligence part. Make sure you understand the person that you're dealing with, their complete background, as, best you can, check on that. And then maintaining that, right? Yeah. And doing anything to kind of cross the finish line, but also making sure that they're comfortable as well. So like you said, it is really important to build relationships, but also going above and beyond. That's also key, right? And I think that goes a really long way. And that's the difference between a good capital raiser and someone who's exceptional.
Yeah, no. I think that's a great point. James, what's your thoughts on that?
I look at it like I don't like to use the canvassing or the shotgun approach. I prefer the sharpshooter, and I do my homework first. And for example, right now I'm raising money in Central America and South America. because there's some countries that are moving more towards socialism. And when countries move towards socialism politically, the high net worth and the wealthy families, they want to get their money out of there, so it doesn't get taken away from them. So I'm sort of a back to front approach to this, where I find out where people want to move money, and then I provide a place for them to bring it with deals here that are direct instead of being through the institutions, which is sort of win-win, because for me, when I was working with institutions for so many years, I was doing all the heavy lifting and all the work, and they were taking most of the fees, the institutions, and the families are investing in the same deals that I'm doing and are having draconian fees that they're paying. So we don't really need to have the institution there. If you can build a relationship with the families or the high net worths, it's a much more happy relationship.
Yeah, it's your relationship driving. And it's interesting when we talk about due diligence, because due diligence means different things to different people. And to me, it's like looking at the person you're investing into like a jilted ex-lover. Really, you want to know all the dirt. You want to know everything on it. We were talking about this and socializing some people who we knew who are not the best people in the world, right? There are dirt bags, unfortunately, but socializing and getting around that, I think, really mitigates a lot of the risk, right? You don't want to be the guy that writes the check. I like to, and a lot of people don't do this in capital allocators, is that I like to socialize the deal to my smart friends first, right? Let them poke holes in it before, I really risk my reputation on that. You don't want to know. There's a gentleman that we both know, Marco Soriano. I don't know. Do you know Marco? You know Marco.
Maybe.
He's crazy. He's in my book. He's a fourth generation family, great friend of mine. And we get invited to sit next to each other at conferences and make fun of each other. And he asked me at a conference I was speaking at for the IMN Real Estate Family Office Conference before the pandemic, and he was being funny, but I also had an answer I didn't expect to really say on stage. And so he asked the whole panel, he said, "What is your definition of risk?" And he's going down, and one person said, "Relative return," lots of buzzwords. And by the time he gets to me, like, I'm already in that mood. And I said, "It's what your friends and family will make fun of you for at Thanksgiving if the deal goes south."
Yeah, there you go.
Right?
Yeah.
Family to keep you in
Like
check.
this guy here who has the attention span of a gnat, he's going to invite you into some classic car club, right? Like, or something, like all of this stuff, you can just tell. And I think a lot of people today, there's a lot of idiosyncrasies people have, and that's fine. But you can judge, I think, a person's character today much faster than ever before.
Yeah.
Right?
Yeah.
Yes. Well, wonderful.
Yeah.
I want everybody to know we're live on the Owwll app. We're taking questions as a live call. I will remind you, if you have any questions for Funding Fridays, you want to use the Owwll app to get in, to be able to ask this illustrious team a bunch of questions. So getting back to overseas capital, which I think is kind of interesting, because a lot of people like to discuss that. What are the drivers for that besides the socialism? Like, why are they going to you? I mean, I know you're a professional, fourth generation and everything, but is there so much money that they just are indiscriminate right now and they're looking to put money into anything?
No,
okay.
they're actually are pretty they're pretty smart investors.
Okay.
Most of these investors, they've already invested here in the United States. They've got a presence here already, but they want to go with somebody who has the expertise that isn't going to, hit them with big fees and difficulty to exit the deals. Whereas, I give full discretion. I'm bringing a deal to these families. I give full discretion. They can go, they can get in it. They don't have to get in it. But usually it's a long-term investment. Where with the institutions, it was always a 3 to 5 year sort of turn, so they could scrape their fees and do another deal, even if it wasn't the best
with a double promote.
Right. So what I found is that the families, they're more looking to invest longer term and just park the money there, and that's really the kind of investor that I'm looking for, because it's actually the reason why I moved towards away from institutions, because I didn't like that churn.
Oh yeah, I've been through that myself.
It's hard to get a really good deal going, and at least in the apartment business where I work, it's that's like an ATM machine. It's the gift that keeps on giving. And once you got that thing humming,
you don't want to sell it.
And some of the institutions that I was dealing with, even they were like, why are we selling this? Where are we going to put our money next? So I just think that the whole institutional model is
it's asymmetric.
There's better ways to do it. I found much better ways.
But if you have a pedigree and you're coming out of like a Wall Street bank or something, that's the first guys like you and I do. 29, I raised $30 million from a Park Avenue institutional fund manager, right? Me and another guy. And at the time, that was big. I mean, 29. I mean, I mean, that was a long time ago. I know you're 21. I know you're like,
I
you
wish.
know, I was like, and even then that was big, but everything was very controlled. There was shared discretion. I had to be in and out, but I was also a first-time manager, so I was beholden to them, and that was going to give me the leverageable brand to do other things later on. But yeah, the families are much more patient. I really appreciate that. Walter, what do you see on the venture side as it relates to the families investing? They add a little more than just the money, right? They're more than ATMs.
Well, the first thing is whether they want to diversify from their family business, right? I mean, if
Assuming they do,
somebody
yeah.
if somebody is,
Mhm.
let's say, a traditional real estate investor, then what I propose is for them to take a look at a different side of real estate. For example, I had a meeting with a private equity investor yesterday, and the discussion was, well, have you ever taken a look at data centers? And essentially, a data center today, you're offering power and services for big corporates. And they often want to diversify so that if there is an issue with power in Texas, that they can at least do some continuity planning and offset that in another state. And so the investor was like, whoa, wow, that's interesting. So you're not only a tenant, but you also are managing their risk. And I
Mhm.
said, yes, because we can also trade on power. We try to do the peak performance when power rates are low and try to do the least amount of compute power when the rates are high. So we
Mhm.
can actually take advantage of that. And so that's another dimension for a traditional real estate investor they don't look at, and they'll be like, well, I would be interested in putting 5 or 10% of my assets into that type of opportunity, because that would be a good way to diversify.
Yeah.
So even within real estate, for example.
Mhm.
And then I have my investors that are more interested in tech, and they see the tremendous growth for power needs for AI, ML, and the lack of really good structural infrastructure players.
Mhm.
And I basically tap into their need and desires for a tech play on that. So I depends on what they're looking for. I kind of customize it and I offer it in a way that they understand
Yes.
how it can add value to their portfolio.
Yeah, I mean, I can't tell you. I know this is Funding Fridays, but I've seen so many pitches with acronyms and terms and technology that I don't understand.
Yeah, keep it simple.
Yeah, keep it. I look, the guys who are attracted to this with the PhD class, and they don't have the money to write a check. So, the families we're talking to, they need to be convinced or educated gently as to why this is important. Um,
I actually would like to add something that I say
Please do,
often in my
Professor. Yes.
classes. It's really simple to present an idea that makes sense. And I often say to my students, if you hear something you don't understand and they use a lot of buzzwords or complicated terms, they're often trying to, on purpose, not only dazzle you, but make sure that you don't really quite follow them. So you won't be able to really ask the pertinent question that will really get at the crux of the issue. So what I'm trying to say is that the more succinct and clear your pitch is or your ideas are, the more respect and the more understanding you will get. So the true speakers that can speak to everyone in a clear way and they can convey their ideas in a very concise manner, those are the subject matter experts. They're the ones that you can understand, that they've been through a lot and they can distill complex ideas into simple terms. And those are the people that I have time for and that I think are people that are accomplishing their goals in an efficient, effective manner. So try to always be as simple as possible and explain things in a way that everyone will understand, because then if they have questions, you can actually go to the next level down. And that's a true thought leader, that you can actually understand what they're saying. And if you have additional questions, you can take it offline, or you can actually, meet with them another time.
Yeah, I think, through all the rubber chicken lunches at the Harvard Club, what I've learned is some people get actually intimidated into investing, and they see a wacky, very, very wacky, crazy looking professor, maybe looks like James Korman, in life sciences. And what they do is they just wind up, these life science CEOs, they just baffle these people, and I call it quant-splaining, right? And they quant and talk and talk and talk, and then finally, their breath stinks. You're like, okay, I'll write a check, just so you get out of this. But they have no idea what's really going on, because they think that the person who they're talking to, just because they're very smart in what they do, doesn't necessarily mean that they have the commercial ability or the
the marketing or the salesmanship and the persuasion to be able to raise money. And it's not just about raising money, it's enticing people and, counterparties like what you were talking about to have corporate, VCs and your latest endeavor and everything like that. That takes a lot of skill to be able to do that. And a lot of people take it for granted.
Yeah, absolutely.
Yeah, I think, you bring up a very good point. You can't just throw words at the wall. Eventually things will unfold, right? When we're talking about the speed of a sale or speed to market. I think.
Whoa, oh my gosh. All right. Hello, caller. Welcome to Funding Fridays. Are they on?
Hi, Sal. It's Bob. Can you hear me?
How are you? I can hear you. What's your name?
Bob.
Bob, you are on live on Funding Fridays in front of thousands of people on LinkedIn and the Twitters. How are you doing?
Good. So I have I didn't realize I was going to be in front of thousands of people, but this is good. I was wondering. I work with a company. We do digital marketing for a number of small startups, and I was wondering if you're looking to collaborate with that kind of company, or what your thoughts would be.
Well, what does that mean by collaborate?
We've worked with a number of venture capitalists in the sense of we come in after Series A and help them increase the value before a Series B.
And how
So
is that value? How do you drive that value?
primarily through digital marketing. That includes things like branding, all of the usual digital marketing services.
So we don't. I mean, none of the companies we have, they all have services that do that. I do see that there is a need for that, and I'll be honest with you, it goes back to images, everything, right? Like how many times do you see someone who wants to connect with you on LinkedIn and they don't have a profile photo? I'm like, So I mean, there is a dire need for this, and I think a lot of people put that on the background. Alyssa, what's your thoughts on that?
Yeah, I think there's two folds here, right? It's two-part answer. One in which, I do believe in marketing. I mean, we're here today doing marketing right now,
Yes.
Sharing our expertise and our brand and, our services. So there's definitely a value and there's a significance behind it. But I also think it's a very careful, cautious way in which we're sharing information, especially for funds, right? Because a lot of these funds and opportunities are very sensitive and confidential. So, I think I think it's more of like a personal situation. Again, I do believe the power of marketing, but I think also we have to be very discretionary because it is very, risky, high sensitive information. Maybe there's a new way in which I'm not aware of because I'm not an expert marketer, that we can maybe create some sort of additional value. But, I haven't seen anything yet like that. Maybe with the power of AI, that will be also unique resource for how we're marketing some of these funds.
James, you're a real estate guy. Real estate people hate technology.
Yes, we do. It's true.
Okay.
Don't ask me my
You're sort of a
username or
unicorn,
my
though.
password. But no, I think that there's the marketing in my mind is good because a picture tells 1,000 words. I mean, if you have good photographs and you have good graphics, in your deck, I think it makes a huge difference. So, but beyond that, as far as the outreach, I find that most family offices are very private.
And
And they don't really want that kind of
Yeah.
thing. So
No.
I've had people say to me, I can enhance your website for Korman Ventures and make it really, and I'm like, but if you go and you look at the family offices websites, all their homepages, they're all very
They're selling a service.
very
Yeah.
few,
Yeah.
there's not much there because they
No.
want you to, they're very, just very private.
Yeah.
Yeah.
I mean, for obvious, Walter.
Well, my first question is, since you work with companies that have already concluded their Series A and looking to Series B, what industries are you focusing on? Because Sal will attest to this. There are certain companies that don't really do well in marketing and they prefer to have word of mouth. For example, Stripe.
Yeah.
They
Yeah.
do all their work, let's say, between developers. The developers are the ones that refer them to other developers, and they have their own streams that they go through, and it really is the word of mouth. So depends what industry you're really focusing on.
So we primarily work with technology companies. We've also worked with fashion companies and consumer goods
Fashion.
companies.
That's
I know a
you.
little bit about that.
Okay.
Yeah.
Yeah.
Go for it.
I mean, fashion is definitely a great avenue. I used to work in fashion before joining the commercial real estate industry. At the time, it was many moons ago, so this was pre-technology. There's always, I think, fashion is certainly an industry that's ever evolving. They love technology; they're really embracing it. We're seeing a lot with AI and doing fittings, virtual sizing. So I would definitely explore, more the like the hybrid between technology and fashion as well. It's a great, for fashion, like you said, image is everything. So I would certainly stick to that industry.
All right.
Okay. Thanks for your time, guys.
Thank you.
Thanks for calling in.
All right. Bye.
Perfect. Yeah, I mean, social media is meant, for the most part, is to help build trust, and I think people are starting to learn that the hard way, and it's amazing to me how people are just, you get the boomers, and they're the ones who are like, hey, can you help me raise capital? I'm like, well, you go to their LinkedIn profile, and it's just like it was like brand new, set up a minute ago, right? Like no photo, nothing set up, and I'm like, we're in a post Bernie Madoff world today. Everybody wants to know who you are. Like the families can be secret, that's fine, but you're not.
Right.
All right, you're not. And even a lot of the I wouldn't say families today, but a lot of them have personalities and brands around them too. Like everybody looks at Mark Cuban today, right? They don't know him as the broadcast.com guy. Back in the day when we were coming of age, it was Pepsi, it was British Airways, it was a lot of these brands doing all sorts of outrageous things. Even Virgin Atlantic today, it's Branson, Zuck, Musk, and Korman, right?
Sure.
Right?
Thank
Okay.
you very much.
Right. So yeah, no, I mean, things have changed a lot today, and I think that you need to build an online presence just like you would, put anything else into any other effort. I think, and we're in a swipe culture today that forces that.
I think also, just to add to your point, yeah, it is very visual and there's a lot of exposure, especially for capital raisers, but you also have to back it with something.
Yeah.
So,
Yeah.
it's very easy to fact check someone and provide legitimacy, and that's equally as important as, what you look like.
Yeah.
And your brand that's out there.
Yeah.
So, nowadays, I think maybe a couple years ago, if it was a shiny object, like people gravitated towards it, but now it's just, you have to have experience and opportunities under your belt in order to people take you seriously.
And you got to communicate that to people.
Right.
I can't tell you how many CEOs I've met, and I'm like, you've taken 17 companies you've sold. Why is this not on your website? Right. So they need to understand that. And there's a lot of people are still shy of of the interwebs, of being on the socials. Right. So think about it. It's there's a lot of businesses out there that could use that. And, it's over time. I think that's going to happen. What are you bullish on most, Walter, being a Canadian of America? What are the three things that you're looking at right now that would really, get you to like maybe, get up off your seat and take a look at it?
It's actually a very good question, especially in this environment we're in, where everything is inflationary. Everything's inflationary. I think any proposal that will reduce costs is getting my attention.
Perfect. Welcome to Funding Fridays on the Owwll app. How are you? You are live in front of thousands of people.
Hey, Sal. How's it going today?
Good. You're a little, you got a lot of background noise there.
Oh, I'm sorry about that.
That's okay.
Can you hear me all right?
I can hear you. Who are you? Where are you from? Tell us.
I know you and you know me. It's Dr. Kevin Cox from Florida Atlantic University.
How are you, Dr. Kevin Cox? How are you doing?
Oh, I'm doing great. I figured I'd call in and see if I could get some expert advice from you while you're on the show. It's one of the things I want to do at Florida Atlantic University is increase our kind of ties into the investment community. We have the Runway, which is a great new venture accelerator, but we need to do a little bit of better job communicating with and connecting to the investment community. Do you have any advice, or anybody else who's there with you?
I have some advice. I think I'm going to start with Walter first because he is the professor here. So we'll just.
Hi, nice to meet you, Kevin. So, look, I'll tell you one of the things that I'm working on right now. I have one of my tasks at is to try to bring in, or let's say, build the bridge between corporates and the university. And just so happens that today I have a call with a group out in San Francisco called Plug and Play. You may have come across them. They do a lot of corporate venture capital work, and they have a slew of corporates that they bring in to test founders' products, call it product market fit. And through that experience, they tap into a lot of really interesting founders and investors, and it creates a nice ecosystem. So maybe instead of just focusing on investors, you want to actually try to build an ecosystem that will attract investors. Does that make sense? It's almost like the second derivative that I think people will come if you offer them a compelling platform, a compelling idea. So maybe focus more on that aspect, which is what I'm actually focusing on.
Like a venture studio type of situation.
Yes,
Yeah.
exactly.
I love it. We invested in a venture studio. I love it. It's a great, it's a great investment so far, privately held. Alyssa?
Yes. For me personally, I feel that the best way that I was able to connect with investors or funds was really by going to some of these amazing conferences. I know Sal had mentioned IMN,
Yeah.
some of the family office private events as well. I think that's really one of the most beneficial ways is always in person. I'm a big believer of meeting in person.
Yeah.
And that's a great way to just start the relationships. And then you have to, of course, do follow up and maintain the relationships. But really the conferences and special events that are catered to fundraising are exceptional, and they bring so much value and also educational. There's a ton of them that have panels and things that you can learn from. So I would highly recommend getting out there and just meeting in person. I'm going to do a shameless plug right now. I actually have a website that has a list of the best South Florida networking events.
Oh, wow.
Yeah, so it's,
wow.
Yeah, I created a website that has my calendar essentially of my upcoming networking events that are, really focused on the developer side. So you'll meet, fund managers, REITs. I'm also going to be adding private equity and some public family office events to that, such as IMN.
Yeah.
So again, it's my first name, last name.com, and you'll see all of my calendar of networking events in South Florida.
That's amazing. Kevin, I think, you just got to go out there and build the brand around some sort of an incubation type of thing down here in FAU. That's what I think. I mean, you got space, you have space here, not space as far as physical space, but, you have, SpaceX going up very close to here. There's a lot of opportunity, I think, to capture that. And even if you follow, I think Stephen Ross is trying to do that in Palm Beach, right? Your people. Yeah. So he's trying to turn Palm Beach in the next,
He's bringing Vanderbilt.
Yeah, he's bringing some real people. So this is a big deal. What about you, James?
I think it's more unconventional the way that I, develop these relationships, because it's through the charitable work that I do. The people that I meet through charities, they are very usually good people, and they're looking to invest, a lot of times. And my other thing, it's an upside down world, because I used to, with institutions, I would go to New York, I had my hat out, I had my deal,
your tin cup,
and now when I go to these family office events, whether it's 1640 Society or whether it's Fox Family Office Group, I don't even pitch.
No,
I just tell people that I'm involved with real estate.
Yeah.
And they come to me.
Yes.
And they're asking questions, which is like an amazing. It's so much better than the other way of going to New York with the tin cup.
It's more organic.
And and what I find is that it's, and the other side of the coin is when I'm dealing with family offices. The interesting thing is sometimes the family office has a mandate. It's going to be this much real estate. It's going to be this much tag. So what I find is these generational wealth, a lot of times they'll want to invest outside of the family office mothership. So even though the family office has invested, X amount and filled their real estate arm, basically some family members will say, well, we don't care if that's filled. We want to invest outside of that. So again, it's all about making, relationships. And, the family office that I've dealt with, they all hire somebody from Wall Street out front. And you have to get past that.
The CIO. You got to get past Walter.
The gatekeeper.
You got to get past Walter.
It's one of the things I've heard from a lot of people. I've been trying to get into that family office, but I can't.
Yeah, everybody does. I mean, who doesn't want to be close to like the ATM machine, right? I mean,
but they say they can't get traction, and so the key is that by going through the charitable, way, or or also I'm involved with Drexel University. We have a property
in Philadelphia,
property management and development, major there. Which is, again, the people get involved at the board members, a big board, and all those people are sort of incentivized, not incentivized, but we want to give opportunities to the people that are in that studying that those courses that are about us. I do it because I want the curriculum to prepare the kids better. So when they get to college, they're actually can do something. They're useful.
No, it's a hard skill.
But what I found is that what comes off of that which I wasn't expecting, was relationships are, again, it comes from that non tin cup sort of approach.
I'll tell you one thing I learned going into life sciences, which this is 10 years ago, nobody likes to invest in life sciences.
Very risky.
Well, it's not just risky, it's that nobody wants to be reminded of biology and chemistry from high school, right? Nobody, except for me, I had a passion for it, but I didn't follow it, thankfully. But a lot of people barely pass those courses, right? And so when you start talking to them, they don't understand which way is up. But what I was able to do, and this goes back to the charitable thing, is that all the families that I knew, when I told them I was doing this, what I told him was, you're putting a lot of money into charitable health causes, such as, name whatever, Susan Komen, whatever, but you don't know where that money's going. And it's a very emotional thing. And so through philanthropy, they were already having exposure or a gateway to life sciences. And when I told them that they could change, where they were 10 cents of the dollar was actually going to as intended, and you didn't even know what it was, some crazy guy in the basement of a laboratory. Or it was actually going to these companies, private direct, and you'd have 100 cents on the dollar to go towards that. That changed everything because it gave them the discretion. They were able to touch, they were able to see, and they were able to talk about it in front of their friends.
Yep.
So, Kevin, that could be a good idea too, where you talk to these guys as far as like, what are they investing into in their philanthropies that run correlation to what you're doing?
Yeah, I think this is all great advice, and I think Florida Atlantic's well positioned to do it. Our accelerator just celebrated 10 years. So although we take really early stage companies, well, some of them are not so early stage anymore. Certainly the alumni with a track history of that long. And we've had some massive successes. As you may be aware, we have a unicorn from our first class with the company Chipmunk. We just had him back to campus a couple weeks ago. So I think the timing's good. And, we're going to keep leaning into the entrepreneurship space. Shout out to one of our student founders. I just returned from the Governor's Cup statewide pitch competition where Florida Atlantic took home the championship. So we even beat out UM's entry into the competition.
Good for you.
Wow. That's under your leadership, of course, and tutelage, correct?
Good for you.
Yeah. For better or worse.
Actually,
I
Kevin,
tried to give him some advice.
Kevin, is Manny Medina an alum of Florida Atlantic?
Yeah,
I think he got
absolutely.
his accounting degree there before he went on to bigger and better things. Yeah. So he should be your main flag bearer.
Yeah, we're hoping he'll name something real big one day.
Good. He's a good man.
And Kevin, this is James speaking. If I can help you out with any information on Drexel University and the property management and development program we have, you feel free to reach out.
All right, sounds good. Thanks for taking the call.
All right, thank you, Dr. Kevin Cox. Wonderful.
All right,
great to hear from him. Yeah, I think I think you're paving the way today, where a lot of these universities have just been breeding grounds for entrepreneurship, and like look at MIT in one extreme circumstance, right? Anything that comes out of there is usually gold plated.
Yeah. But there's actually something a little bit more going on underneath, which is that funding is a very big issue for a lot of these universities.
Today they are.
They lost the visa, foreign students. They're under some tighter constraints due to the current, situation in DC. So they really need to find either alternative ways to get donors to contribute or reorganize.
Yeah.
And you've seen this actually. My alma mater, University of Chicago, we just merged 2 departments.
Wow.
About, interesting cost cutting. So universities are starting to be affected by this.
Good afternoon. Welcome to Funding Fridays on the Owwll App. How are you?
Hi, I'm doing well. How are you?
Good. Who are we talking to, and where are you from?
Yeah, I'm Danny Newman from Milwaukee.
Milwaukee. Okay. Wonderful.
From Milwaukee.
Rocky. Okay.
Milwaukee.
Oh, where's that?
Right there. Read it.
Milwaukee is an app for Milwaukee is an app for college students.
Oh, okay. I thought you were. I said, where are you calling from? I didn't.
Oh.
That's okay. And I thought you said Milwaukee.
So I'm calling from Miami.
Ah, okay. Yes.
We drove from Miami today, so we're going back.
Are you guys in Boca right now in the Owwll studio?
We are. Can you tell?
Yeah, yes. All the colors. I love it.
That's great. Lots of Celsius too.
Yes.
So what are you working on?
So my husband and we have an app called Walky, WALKY. And we are the first social health platform. I'm not sure if you guys have heard of the term social health.
Can you tell us what that means?
Yeah, so social health pretty much highlights the importance of connections and relationships and community. So if you think about adults today, when they're looking for a job and they're struggling to, lean on their community to find a job, for example, we want to help the next generation form their community in college.
So is it sort of like a professional platform for young professionals, I would say, more centered towards younger people joining the industry versus LinkedIn?
So it could be, and that's one of our modules,
Okay.
but our mobile app is a low pressure platform for college students to meet each other in real time on campus.
Okay, interesting.
I think it's a great idea.
Yeah.
Really great idea.
Yeah.
Yeah, thank you. We launched this January, just a couple months ago, and we just had a question for you guys. So right now we're in early stage, and we right now know that we have a proven product market fit. And we wanted to know, how do you find investors? So we've raised $250,000 out of our 750 goal for our seed round. And we are struggling to find more investors who are willing to invest in something that's quote unquote high risk, right? But it has a very strong product market fit.
Have you proven it in the market yet? How many people do you have using it?
Yes. So we launched mid-January at FIU at one of the campuses, and we're doing really well. We have over 2,500 students on our platform. In the last 2.5 months, our Instagram is growing by the days. Every day we're getting 30 to 40 new followers. All our posts are going almost viral. Lots of shares. We're getting messages every single day from different students around the country asking us to open Walkie at their school.
Wow.
That's interesting. What do you think, James?
I think it's great. I think it's I know I've got 3 kids that are college age, and I think that everybody's looking for ways that they can connect and try to find positions that they can work at, or careers they can follow. And I think what you're doing with Walkie is very smart, because I think that I think my kids would jump all over that personally.
Danny, what is your business model? What do you charge? What is it, subscription based? Is it sponsorship subscription based? Because the audience is obviously very attractive for maybe some corporates that want to show their products or services for students, noting that they will eventually get jobs and take out loans and get better paying jobs throughout the course of their careers.
Yeah, these are great questions. So we do offer a subscription base through the school. So the school will either do a pass-through cost to the student, or the school pays for it itself. Why? Because when we help colleges retain their students, colleges are saving a lot of money by retaining their students.
Well,
So
that's a good question. I mean, what's the retention rate in college today? Do people just drop out, or they move to another school?
Yes, thank you for asking. So 1/3 of students are dropping out on average, even pre-COVID, in their first year.
Wow.
That's very high, but that's probably because FIU is a state school and it's quite a big school as well. So it's very hard to find that kind of affinity when it's such a large school.
Actually, FIU is doing pretty well. They only have a 10% dropout rate, but on a national average, there's a 33% dropout rate nationwide. And one of the main reasons, the top reasons, is because students feel like they don't belong and they're not making friends and they're trying to look elsewhere for the connections.
I mean, this is a digital generation today, right? I mean,
Media, yeah.
what say you, Alyssa? You're a college
mean,
student.
yeah,
I mean,
I
not too long
wish.
ago. But
Many moons ago at University of Miami. But I do think this is an amazing way, because you're essentially integrating what is drawing people away from school back into school, right? I think people are leaving school because they're seeing more opportunity to create wealth on social media, TikTok, Instagram. I mean, people are making millions of dollars on, a simple post. So, and it's funny that, you made the point of connection. people aren't connected anymore in person.
Yeah.
So how do you integrate, what people feel comfortable with, which is social media now, right? That's
Yeah.
people feel more confident connecting over, virtual than in person, and bringing it back to the roots. So I think it's an amazing idea. Definitely see the need for it. As you said, you have kids in college too. I'm sure they're experiencing the same thing. And if you can also, create a channel for corporate companies to connect with these students in a way that they're used to, I think it's phenomenal.
Yeah.
And like with LinkedIn is not that appealing to college age kids because there's nothing to put down there yet.
No. And it's an echo chamber of people who have jobs mostly.
And it's really up to the universities to kind of keep up with the trends, right? If you want to retain students and we were talking about schools not having funding anymore, like you have to kind of be on board with this wave of technology.
And also, I think data is monetizable now. That's an asset. So I mean, as you grow this, I would think there's going to be people that would be very interested in partnering with you to get that list of students.
And it's not just data, James. I mean, we have athletes now at the college level that have NIL deals that are in the millions of dollars, So there's a lot of branding that goes into this. But I actually want to say something a little bit different than what you heard from Alyssa, because I want to make sure that it's understood that very, very few people make $1 million on a post. Okay. If a pro athlete makes it these days, it's 0.01% of college athletes. So there's very, very few of them that actually make it. So I'm a big proponent of upskilling and really having a specialization and going back to school or taking classes for that matter online. I think it's the best investment you can make for your life, your career, and you should never stop learning. So, but to the point of your app, Walkie, you really need to partner with universities, because this is really a university's main task to make sure that their students are actually engaging with the university, that they understand all the benefits they can get from the university. It's not just academic. They can get involved in let's say, academic functions, extracurricular, that they engage with all facets of the university, because there's a lot of work that goes into building that. And if you can connect with the right people at the university level, I think that's your main corporate sponsor right there.
Yeah.
And then all the other affinity groups that want to target the students, for their purchasing power, let's say, down the road. But you need to really partner with a university, and that means their engagement. There's so many levels at different universities where this issue of mental health comes into play. Relationships, between academic institutions and extracurricular institutions. There's a whole aspect of university. It really is quite detailed, and I can tell you that I'm always learning about new jobs and new hirings at universities, and it's all really focused on trying to improve engagement with the students and the alums, because that's ultimately what universities need, right? To connect with the alums so that they will give back.
Yeah. On that last point, I think I'm bullish on the idea. I don't know too much about it, but I think since the pandemic, we've been in the middle of a loneliness epidemic. And I think, people are isolated more so today. You have people who are very depressed and sad, and the reason is because they can't interact with other people. So wonderful. I want to say goodbye. Thank you so much for the question. I appreciate it. You got it.
Good luck. We'll look for Walkify.
All right.
Cool.
Do we have anyone else? We're good. All right. We're taking calls right now, which is absolutely amazing. I mean, these apps, they come out, some of them are, they're fleeting. Some of, you look at Snapchat, that was a darling at one point. Facebook is maybe going through some bumpy area right now. People gravitate, the young kids like you go to TikTok and Instagram, and the old men go to LinkedIn, right?
Yeah.
Yes, we do.
Yes, we do. So,
but on this topic of, engaging with students, there have been some fantastic businesses that have been created. Look at Sophie. Sophie was started by Stanford University students, and they thought, how do we tap into lending pools, and they said, well, why don't we first try alums, because alums know us, and whoever borrows money from an alum will try their darnest to make sure they repay it.
Oh, yeah.
Otherwise, they'll never have a shot in life to get a job from a Stanford University alum. So that's how they started their business model. And they knew the risk, because as a former Stanford student, you know more or less what the right credentials are. If they're in the engineering school, chances are they're going to be getting a job in tech, or if they're in the finance program, maybe you track and see what type of an internship they've had and whether they're going to get a job in private equity or VC or Wall Street. So you can actually do a lot of due diligence already if you know how the system operates. And that's how they got started. And sure enough, today they have a banking license, and they're doing very well, focusing on the student, but also going into the graduates of universities. So there are good businesses out there. You just need to make sure you set your strategy accordingly, and you block and tackle, and don't deviate much from what it says on the tin can. This is what we do, because investors want to make sure you're focused on your strategy. They don't want to invest in strategy A to then find out they're in strategy D.
Congruence.
Mission creep.
Yes.
Yeah.
Mission
Pivot,
creep.
pivot,
Yeah.
mission creep.
Yeah, mission creep. Yeah, I mean, that's amazing when you think about the emotion behind that. That's something that would never be done before, but it's sort of like the fealty that alumni have with their alma maters. It's just it's crazy. Go ahead. Yes.
I was
Like-
going to say it's a 1 + 1 = 3, because I think not only do the universities would be interested in this kind of thing, but also the companies. I'm telling you, companies are starved for good people.
Yeah.
And they will glom onto this type of a thing. And it's similar to what to what I'm trying to do with raising money and doing good for the world. It's sort of like the developers need to raise money for their deals.
Yep.
You have people in Latin America that want to invest here in the United States. So it's like it's two parties that both want to work together. So
Yeah.
it's just a matter of introducing them and creating that trust. And but just like, so it's the schools and it's the companies, and it's the same as what we're doing, because it's the developers and the equity people that want to deploy.
Mm-hmm. On that point, before our next call, why this is a question for Alyssa and James. Why, whenever I see something that's property tech, like some sort of change or gadget or something, I always get very cynical, because being in the real estate industry myself, those are the last people that will adopt any technology, right? Why is that, James? I'll start with you, James, and then we'll go to Alyssa afterwards.
I guess in our case, we've been doing something for so long. It's sort of it's not broke, don't fix it kind of thing. When we bring in new software, sometimes there's a lot of brain damage and getting it deployed. It's oftentimes it's worth it, but it's hard to get us old real estate guys to jump into anything, because we're sort of focused on what we're doing and we're doing it well. And so sometimes we are slow to change.
Alyssa?
I think you have to measure the margin of ROI, right? Like,
does it move the needle?
From a business perspective, is it really making that much of a difference on your bottom line? I don't know, maybe not, but I will say, I'm in the pre-construction phase, right? So like I touch everything pre-groundbreaking, usually like couple of months before. I am seeing a lot of developers adapt to technology, because it's very competitive, especially on the multifamily side. So, I mean, developers really have to incorporate everything advanced, newest, latest, coolest to really sell their product, to sell their condo, to sell their multifamily, because it is probably the most saturated market, at least in South Florida.
Yeah.
So how do you differentiate your product compared to every other luxury condo, especially branded developments now are really big, especially in Miami. How do you make your property stand out? So I think the newer projects, we're starting to see that incorporated, but I think at the end of the day, it's the ROI, right?
Yeah.
Like you said, how are you saving money?
Have you heard of a group called Fifth Wall?
Yes.
Okay.
Yeah.
Well, there's it's not just having a competitive advantage. It's really what the customers want.
Right.
They want to know how efficient the apartment is in keeping the cold air in the blasting summer heat of Miami and come July, August. They want to know how efficient is it to, from an electricity standpoint, water metering standpoint, if they're going to be away, how is anybody going to be able to monitor whether there's going to be a problem or not? Therefore, you need sensors, and the whole IoT space is blossoming. So that's what the people are asking. And therefore, if you build it, they will buy it.
Yeah. And then in terms of technology, on the insurance side, insurance is very costly right now, right? So a lot of the carriers want to see how are you lowering the cost of, like you said, like, certain factors, things that are preventing water damage and all of these things that could. So technology is actually really being incorporated now, especially on the insurance side, because it's able to lower their premiums, and anything that can help lower premiums right now is valuable.
Let me give you a real life example. I live in a nice neighborhood in Miami Beach, south of Fifth, and we recently changed our meters in our condominium building. Lo and behold, it took us about 6 months to figure out that our water bills that had escalated 2-3 times was due to a backflow issue with the new meters. So we were trying to figure out how come we're now having to pass on and higher HOA fees to all the owners when this water issue was just a mystery to us. And it was because the water meters that are put in place now were actually doing double counting. So there is a double-edged sword to technology, and you need to be on top of it. And that's why it's so important for the property managers and the developers to really understand what could possibly go wrong so that we don't have any of these benefits come back and bite us.
And it's also how fast the things change.
Yeah.
So I'm reluctant to, really invest in something where a year from now it's going to be obsolete.
Yeah.
That's one of the reasons why us old guys don't love
Right.
the new technology so much.
But it does move the needle. Like, I remember moving here, and since then they installed a locker system in the building I live in, which is a nice building, and it's in the ground floor. And you put in a code, or you just hold the app. It's called Luxor to the
We
thing,
just got that too.
Like
and it pops
deliveries?
open. It sounds like a charge going off. It's like poof, right? It just like shoots it off. But they fired 2 guys, right? So that job right now, there's only one guy in the package room that does everything, and everything else is handled by this Luxor app. So it is, saving efficiencies. I think hotels would become, on the extreme example, hotels would become very attractive when you have robots making beds, right? I mean, you get rid of the OpEx there. I mean,
Yeah.
Ooh. And I'm not saying I want to fire everybody, but this is the inevitable. I think what people are investing into today. It's a corollary to like the robotics, the chips, and also some other things
AI.
as well. Yeah, AI. Yeah.
Yeah, we have a dean in our business school, a new dean called Paul Pavlo, and he comes from the AI space. And he had a great presentation at Emerge Americas last month, where he said, it's not that AI is taking your job, is that if you're not capable of working with AI and understanding the benefits, you're basically going to be limiting your career choices.
Yeah.
So you need to be somewhat functional as to what are the benefits of having Copilot on your Microsoft, so that you can be smarter, you can optimize your time. So we were talking earlier about what is it that attracts me to make an investment. And I say anything that will reduce costs, anything that will increase optimization and productivity. And you can use AI to become more efficient and effective and actually have more free time, because it's your time that's the most valuable asset that you have. So use it wisely.
Unless you're a lawyer, then you're going to be taking on 10 times the caseload, right?
Actually, no, AI is massively disintermediating the legal, because they can screen through documents and look out for any anomalies and highlight those. So no, that is not a profession I would be enticing anyone to get into.
Not at all. And I think it was David Solomon, the CEO of Goldman, that said that AI can put together 95% of an S1 filing.
Yeah, that's exactly right.
That is insane.
That is unbelievable.
I wouldn't want to be at Latham Watkins right now, but yeah, I mean, it's that's just the way it is today. And technology is great if it does move the needle, but I think sometimes just having the convenience of something,
critical thinking.
yeah, the
right?
critical
We
thinking.
don't know how,
Yeah.
Well,
yeah.
it's the acid
critical
test.
thinking it can do,
Yeah,
right,
it's the
right,
acid
right.
test. I mean,
Yeah.
you make sure that it makes sense, because there's a lot of hallucination that happens with AI, and whether or not you catch it, it's on you. So, I mean, I see students using AI all the time, and it's not bad. They just need to be mindful that I want their ideas to come through, and then have AI support their, let's say, critical ideas. But you can use AI and become a better rounded person. But you need to override that. You can't let the system lead you. You need to lead the whatever crutch you're using.
Yeah.
Yeah, no, that makes
agree.
sense. I
Yeah.
agree. No, that's wonderful. We're starting to see that in healthcare too as well. A lot of people,
Imaging.
yeah, imaging. I mean, it's great, but you have to also remember that a lot of the technology we use today, especially at the retail level, is it's a subject to habit, right? And a lot of people, like I use an app to track my calories, most of the time, except for when I'm out to dinner with Alyssa and expensive, expensive dinners at the CTC and everything. But really, it's like I don't do it sometimes, and a lot of times I think a lot of founders have problems getting things off the ground because they expect to have some sort of responsiveness from the users. And I can't tell you how many apps, with the exception of Owwll, which I love using, Owwll here is Owwll, sorry, Owwll, that I've downloaded and never used, right? Because there's always another better one coming up. I think I have like 2 weather apps that I really like, right? And they send me the notifications, and then with a lot of the face apps and a lot of like the filters, there's many of those too, right, today. So you gotta make sure you have a stick rate to it. And I think getting people to do this. I remember I was talking to a doctor, a very successful doctor, who was trying to get people to do dietitian things with her app, and it was a very expensive. It still is a very expensive hobby, I think, because it's very difficult to get someone to use the app religiously on purpose unless they have good reason to do so. Right?
Yep.
It's like what you were saying about property, right? Property tech. Like until something new comes along, it's hard to really commit to something.
Yeah, you want everybody to test it out though. But the amenitization, going back to that, is just that's where it is today. And I know Korman is up on top with the amenitization, and
absolutely,
you got the lockers and everything like that. Just with the lockers themselves, you put that in there. Obviously, you're an experienced and shrewd guy. What is the difference in savings with the lockers now that you've put that in?
The lockers are really it's quite a business, because if you don't pick up your package in like 3 days, they
send it back. You get a nasty email.
They nick you. I just got a $15 charge because I think I didn't pick up my package, and so I haven't gone to the office and figured out what this is about. But
That's interesting.
They charge after like day 3. They start charging you like $5 a day or something like that.
What if you're traveling? You have to like let them know if you're away.
I guess.
Wow.
But I think that's an ancillary income source that is very enticing to and those systems are very expensive to put in, but you have to have something, because otherwise you have bedlam. I mean, we used to take packages in our management offices. It was FedExes and packages. Now you can't do that. I mean, the office will be filled every day with boxes. So we have to come up with some solution. And like at my building where I live, it was like long line to get your package. And now, you just get pinged and you go pick it up and
it opens the locker, shoots it open.
Yeah.
You should be the soundbite.
Yeah. It's an interesting sound. It sounds like a charge going off, like a nitrous, like when you shoot BBs, like when you were growing up, the nitrous, the canisters of gas. Yeah. I always wondered about that. We're not much in the multifamily space, but I just see like now it's just so much more efficient, so easy.
Can you imagine what a management office would look like today with the amount of packages that are flowing through? You have a 300 unit property, 300 apartments. It's a lot of packages that are rolling in. So you have to do something.
I'll tell you the one thing that really impressed me with the whole thing is that I started receiving free products from promotional people. So like I like to use this thing called LMNT, which is so it's like Gatorade, put a little packet in there, it's the hydration. It's electrolytes and mostly salt. And somebody found out that I was using the same thing, or a lot of people in the building, and they just started giving it out. Like, and everybody in their box had like a free box of like.
Oh, so they go around to all the buildings.
Oh yeah, if you're starting a brand or something, you want to start like your own supplement brand or something. The best thing to do is like, hey, I will pay, whatever the freight. There's a way to do this where I'm sure James would be like, sure, pay me some money. Yeah, you can fill all the lockers up with all the electrolytes you want. This is great. And then you get it's a great way of doing it, because it's people are going to see it. It's free if you're smart. And I think you're going to see a lot of brands ramp up that way, to be honest with you, as far as it relates to more of like the domestic home.
And it's a value add. It's something that that differentiates us from competitors. You try to jump on that before everybody else does. But then but you have to be versatile enough to jump horses to do the next thing, because when we tested some of the smart apartment technology, I had my people all test it, beta test it, but I knew that we had to we hired somebody to be out front to see what is the next thing, because my people are running apartments. They can't spend their entire time testing water heads to make sure that the low flow water heads are effective, and all these products are are worthwhile, but it would be a full-time job.
Right.
So we actually outsource that.
That's smart. That's really
Have
smart.
you guys heard about the latest that Trump has done away with that regulation that restricts the water flow in showers from the limit was 2.5 gallons per minute, and he's basically done that away. So people are now looking at 3 gallons and 4 gallons per minute. So you can literally have like a rainfall, like, cataract
Good
kind of
pressure,
falling.
No, it's like
It's
you.
amazing.
When you have a hot shower with that much pressure, it's like you're being sandblasted. I like it.
My friend is in the Navy, and he's on the submarine.
Uh-huh.
And they go underwater for 3 months at a time, and their showers are 60 seconds. They get a 60-second
Wow.
shower because they have to manufacture their own.
Oh,
water.
yeah.
Right,
Water,
right,
so
right.
60 seconds is the shower. So those.
That's a
They
challenge.
have to manufacture the water. They're surrounded by water. What do you
I
mean?
know, but they have to
Desalinate it,
Yeah,
soften it, desalinate it.
Yeah.
Okay.
Oh
I don't
boy,
know if I would survive.
that is just
Yeah.
absolutely amazing the way you see that. So he's getting away. I mean, that's make America, clean again, right? I mean, this is.
Oh, let people choose how much pressure they want in their darn shower. Why should I be limited to some bureaucrat in DC telling me, nope, 2.5 gallons per minute?
Because it's
all you
saving a
have.
very special fish in
Here
Southern
Florida,
California.
we
Yeah.
got plenty of water.
Yeah, we got too much water here, and among other things in
Yeah,
Florida. But
flooding.
yeah, I mean, I've never written a bad review, but one time I wanted to write a bad review of a nice hotel I was staying at in New York, because the whole issue with it was that the water pressure in the shower is like nothing,
Right.
and I
And
felt
it-
I felt like, not good
Right.
about it.
Especially the New York shower water.
Yeah, the New York shower water. Oh my gosh! I mean,
There's an opportunity for prop tech.
that's an opportunity.
Yeah.
Purify this and everything. Walter O'Leary, thank you for joining us. Thank you. Give him a round of applause, everybody. Thank you. We'll be staying on for a few more minutes here answering questions. Thank you very much. Jason will validate your parking on the way out. Okay. Wonderful.
Thanks, Professor.
But Alyssa, let's I want to ask you some questions, because as a female in a very male-oriented business, I'm sure you see a lot of interesting things, right? When you're doing capital and everything like this, do you ever have people who are looking are they looking for you to make introductions to perhaps capital sources for maybe more non-real estate, traditional real estate deals?
Yeah, I mean, mostly it's traditional real estate, I have to say, especially because that is my career path and they know that I'm very integrated in that industry. But yeah, there have been times where I've had AI companies come up, reach out to me, and they could potentially be some of our clients as well with my firm. So I don't say no to alternative investment opportunities for sure. But going back to what we were talking about of knowledge, expertise, due diligence, I'm very cautious, right? Because I'm not as privy to that side of the business as I am traditional commercial real estate. So I like to play in the space that I know, and I think that's also important. You can't really stretch yourself so thin.
Yes.
I'm also newer to the industry. I've been in it for 10 years, which is not that long of a time. Most
10 years.
10
So right after
years.
your communion.
I wish.
Right after your first communion.
We'll keep it at that. We'll definitely keep it at that. But the life cycle of a project is usually like 4 to 5 years minimum. So really that's like 2 life cycles, and it's really not that long of a time. So I don't like to give advice or connect people if I'm not an expert in that industry. Those deals have crossed my paths, and I try my best at critical thinking, really understanding what the need is here, who the best person is. But my focus is traditional real estate.
James, you get hit up all the time as a family office, right?
Yep.
And you see a lot of, I call it, in Miami, you still have these people who come here and they're still sort of like somewhat of a bro culture. And I coined a phrase with my partner, and it's you give someone a number, and it's maybe like you, a guy like, all right, I'll just give him the number if he goes away. And then before you know it, you're in the Uber home from the yacht party, and some guy sends you a deck pic, right? And the deck pic is like a 20 megabyte PDF that he sends to you. You wish you didn't send it.
Yeah.
It's and are you
Unsolicited.
it's unsolicited and you just feel like shameful having it, right? So what about you? What you must get picked on like a pincushion.
It can get frustrating, but again, I look at it like it's an opportunity to connect people. And I don't warrant anything and say this is a great deal. I just say if you're interested in this, this particular type of product, because there are a lot of people looking for real estate that's not habitational. I do apartments. That's my gig.
Yeah.
But
That's
if somebody's, whether if it's trailer parks or if it's whatever kind of real estate it is, I try to connect it with with somebody because, it's just good karma.
Being transparent, right? Just be transparent.
Be transparent. I think one of the things I do when I'm in between calls and I'm not enjoying Celsius on the Funding Fridays, I and sort of not to let my jets cool like in the afternoon when you have you're a little lethargic, I make it a point to make meaningful introductions, and that's, I did that with you. I did that with, you. Remember when you wanted to meet some people. So, that's the importance. And I think when you're starting out, you're looking to build an identity or brand for yourself, is be known as someone that has high value contacts that you can extend. But also look at those people, like, you don't want to be the idiot by association by saying, hey, you referred this guy to me and he fleeced 5 million from other, you want to, you got to be very careful about that, because your reputation in these names can only go so far. Jason, thanks for joining us. Welcome.
What's going on?
We're having some good calls today,
See this. It's exciting.
I
So
know.
Danny called in and she's got an awesome mobile app. I know.
Yeah, I like it. And it fits well today. As we said, it's the middle of a loneliness epidemic. And then, we got hit up by Kevin.
I saw
Dr.
that
Kevin
Cox,
trolling us, right?
Professor of the Year,
Professor
for the state of Florida. Yeah, he won a big award this year.
I mean, that's amazing. He should really leverage that into building like the incubation down here for FAU.
Yeah, he just wears so many hats. It's difficult, right?
I see him at conferences all the
He's at
time.
conferences.
He's like,
he
hey,
has
how you
real
doing?
classes. Then he runs the Shrimp Tank podcast.
Yeah.
Where he built it into the curriculum, of course, this last semester. So he's all over the map. So it's hard. He can't find more time. And then he's chasing down more people to partner with and really write checks as donors, but he doesn't have the infrastructure where he's a full-time person doing that. And then it would fulfill the circle. It's like every business, like a startup. It's like, oh, if I just had one more person that I could afford to pay to do this part of my business, then everything would make sense. But he's wearing so many hats. He's like a startup founder himself.
Yeah, but he is out there,
He is.
And he's no different than any other founder with a tin cup out there, right? But he's got a story and he's got something a little more legitimate that I think a lot of the alums would love to, learn and come back into. I think there's ways to structure it. We can talk about that, but I can also introduce him to some people too, and I think, the conferences he goes to, I see him, it's great, but we joke, but sometimes it's like, hey, we go to these free coffee angel investors and it's a bunch of service providers, not you, but people, and they're like great service. Remember that? Like, I remember he said that. I'm like, I like this guy. He hit it right on the head, which is amazing. I think there's an opportunity here, and I think you're going to start to see that a lot of the schools today are going to be forced to do entrepreneurial type of programs. And I'm not talking about the conventional MBA, but I think something where it's a little more.
Well, let me share one with you.
Please do.
What we're doing, because we've done two things with the Owwll brand, with FAU, and also the podcast, the Shrimp Tank, that I operate. Right. So the first thing with Owwll, what we did is we took a class of over 100 students, and they were required to download Owwll and make a call each month for 3 months in a row. And then at the end of the semester, they had to do a survey about each phone call.
Oh.
So what's happening is this is a pilot program. And as we know, students are addicted to using their cell phone, their laptops in class. Every time I've spoken in front of a class and I've taken photos, I look back at the photos and they're glued to their technology, of course. And they really fear calling someone that they do not know, right? They rather text. Like, we put some surveys up on the board, like, if somebody fell down and, needed an ambulance, would you call 911? And most would actually say no, they would text 911, or they would message a friend to call. Yeah, they would take photos. Yeah. Right. So what we started to realize, like, everyone's like, oh, your app's amazing. It should go, into the Career Center at FAU. And these students would call people to get internships and job opportunities. And we tried that. It absolutely failed. Didn't work because, people are just assuming that students would call other professionals when they would see an opportunity, and they would not.
I'd rather chat GPT it.
Yeah, chat GPT, text, or really IG messages. Right. That's where most of that is going on. So when we make it a requirement, it was 3% of their grade for the semester. Then they didn't have a choice. Yeah. They needed a pass, right? And then the results have come back phenomenal, right? They were able to land internship opportunities and get true mentorship. Right. Ask the right questions to the right experts, not just calling anyone at random, but calling someone specifically they found interest in working with or just talking with in general. And if we look at networking events like Emerge America, like, there's just not enough students there, right? There's not enough, not just students, but people in their 20s today. In the profession that I started in, financial services, I was out and about at every networking event I could possibly go to meet people, to then turn those, conversations into real meetings, into real clients. And you're not seeing that from folks in their 20s anymore. They're mostly online and messaging and trying to go viral on social media. And the truth is, a very small percentage of those folks are going viral. Right. I know Gary Vee says like you could be the next one if you do it 6 months in a row, but still, you know, I'm a data guy. Look at the statistics.
Yeah.
It's a very small percentage. I call it the social media lottery. And even if you do go viral, what about the depression rates after you do go viral, or turning that into a real business
Yeah.
to capture the opportunities, which very few do. So with Owwll, like we're putting it into the classroom setting, we're starting them to learn how to call someone they do not know and build up those communication skills and see the power of networking and building lasting relationships through one-on-one phone calls in a controlled environment where they could block the user, they could end the call if it doesn't feel right, and they're not sharing their cell phone. So we're really excited to get back the data in the next 2 weeks, and then potentially put in more FAU classes and then more universities. And of course, at some point, you know, we could go after some of the grants here in the state of Florida, partner with nonprofits, and potentially that's a whole new vertical for Owwll that we did not see coming, right? Owwll right now is used more by the LinkedIn audience. If you like LinkedIn, you're going to like Owwll.
Yeah.
Because everyone says it's LinkedIn on steroids. You get to call people instantly, you know, while you're driving places, or you have some free time in your schedule, go out and make an outbound call. There's not many technologies where you can meet individuals on the fly for a few dollars, right? So we're really excited about that.
I don't know
partnership
of
with
any.
you.
I think it's brilliant.
Yeah.
I don't know of
Thank you.
anything that does that.
I mean, I put it on at night before I go to bed, and I'm like too wired still on coffee or something. I'm like, I'll just leave it, while I'm doing other things, and it'll pick up. And I don't mind doing that. There's a price to it, of course, but I think there's a barrier to entry, and that's what everybody really likes. Otherwise, it's it's like in it, the walkie-talkie app. I forget what the name of it was, but that just got annoying after a while, right? People find.
Yeah, I think it's a really good incentive, I have to say,
Yeah.
especially because, like, at the end of the day, if you wanted to simplify it, you can't pitch someone on a text. You have to. It's always going to come down when the rubber hits the road. It's an in-person relationship, and talking about following, right? Like, how many followers do you have? Everyone's replaceable. Right? There's always the next hot thing. So I think building loyalty amongst your audience is also very important, and people forget about that.
That's a great point.
And the tone. You know how often
the
someone takes
tonality.
I've had people quit. I've had people like I'm like, you took it out completely out of tone, and there's a lot of research on this. Like when people text things, like the way like I meant to text you, like you took it one way, where I'm like, oh, I can't make it for this event or something, like even going to an event. And you're like, what a jerk. The way he said that he can't go to that event, where I'm like, it wasn't like that at all, or even dating, right? Like
I lost a girlfriend because of the nuance. There's no nuance in texting. And it's problematic.
Yeah, there's no emotion behind it.
I actually like to get all my thoughts out and make all of my points. So I know they can make all my points. But yeah, that didn't end well.
And if you think about like we write these emails.
You weren't pitching her, let's just say, for money, right?
That's right.
Maybe change the modality a little bit.
Or how it is, like the text that took you 15 minutes to write out, or the email that took you 30 minutes. You're like, if I just called this person, it would have been a 1 minute conversation.
Yeah, but nobody wants to pick up the phone sometimes unless you're on the app, and then it's like a willing participant.
Yeah, that's the part of Owwll that everyone loves. Like, hey, I'm willing to accept calls. Which creates the beauty of our platform, of course.
And it's also time management, because I find myself writing this long text message, this long email, and I'm like, I should just call. A lot of times I'm halfway through the text message or the email. I'm like, I should just call.
It's funny. I agree with you. I think, you get more value out of a conversation because there's ideas that come about, right? When you're brainstorming and you're talking. But I've actually started using voice notes.
I love voice notes.
That's a little. Have you used voice notes?
Uh-huh.
Still doesn't get the message across.
Sometimes I go the other side. Someone leaves me too long of a voice note. I'm like, I see 3-minute voice note. I want to cry.
Like three sentences.
Or 5 voice notes in a row.
5 in a row. 5 in a row. That's the word.
You say you're like, okay, with this person, they lost their voice texting messages at this point.
Right.
I wish that they would limit it to like 45 seconds.
They
voice
should.
Notes. Like nothing should.
But then
Because when I see 3 minutes, I'm like, I'm not doing this right now.
No.
I'll skip it for like 4 hours because I get frustrated. I'm like, I'm not doing a 3-minute voice note.
I just like it because I'm driving. Usually, I'm
agree.
on the road meeting with clients. I'll send a quick voice note as long as I know the person. I'm not being a stranger.
Owwll actually, that's our next enhancement. I think by the end of 2025.
The Alyssa feature.
Sometimes you want to message someone for a price,
right?
And then you only get paid once you respond back.
Oh my
voice
gosh.
note. So like the add-on, because everyone's like, hey, I want to just reach out to this person, but I'm not ready for a call. Or maybe you're not accepting calls, but maybe if you got a voice note for $5, then you say, okay, this person like Danny from Walkie is very interested, and you're curious about this app on college campuses. Then all of a sudden, like, hey, I will make myself available tomorrow for you. Give me a ring. So we think that voice notes can really accelerate Owwll in the future. It's just hard building a technology because you're like, Well, more features
Yeah.
accelerate the platform, and you
Right.
keep building and building and building, and eventually you're like, how many checks can you write to developers
Sure.
before you're like, hey, I have enough right now. Let's get it a little further,
Right.
Yeah.
more people before building, voice notes, and then everyone's like, make it a web app so you could do it on a website. I'm like,
No.
that takes me even more time. So
Yeah.
eventually,
Yeah.
I'm like, yeah, that feature is just another $150,000.
Yeah, but that said, I think it's important to have both because I know that
Mhm.
like I like to talk.
Yeah.
You may have noticed.
Yeah.
But
Yeah.
but like my wife, she didn't like talking to people. She would much rather have it be in a text message
Yep.
or in an email. So I think it's important to have both to
Right,
capture
the
both of those.
option.
Yeah, no, I think if you're able, if I can get paid like $1 for a voice note, I might be able to quit my job. Like all the voice notes I get from people, like, "Hey, I sent you an email the other day."
Voice notes, right?
No, I mean that's fine, you're free. But like, all the other guys who you meet at a conference are like,
Oh, yeah.
"Hey, bro, I just want to make sure you got the deck." Yeah, it's 30 pages. I'm not going to read it.
Right.
There's spelling mistakes. It looked like it was done by a second grader. But yeah, I mean, sort of cuts across that right now.
I kind of like spelling mistakes now, though, because everyone's using ChatGPT, and I've actually seen the opposite now. You're
Ah.
seeing people put mistakes on purpose to make it look like it's not ChatGPT writing it, because you guys know, like, if I write an email to you, so no offense, like,
Yeah.
I'm not that good. You're like, Jason's not this good grammar. Yeah, you're like, he was bad back in the day. But you understand what I mean? Where it's like, if it's like sent by iPhone, you're like,
Yeah. No, I do that a lot, and even like when I'm at the gym and I listen to voice text and I send voice text back, I sometimes it goes voice to text and it's kind of wonky, so it looks more legitimate. They're like,
Right.
did you mean Boston or did you mean something else? Like that's
That's really interesting.
Yeah.
Because usually I can tell if somebody's just run the whole thing through AI, but if there's a mistake there, then they didn't. Which is fascinating.
Yeah, so people are being tricky with this. They're telling GPT to make mistakes on purpose now.
Amazing.
Which is next level, which
It is.
which makes sense, because then you stick out in the crowd, like, oh, this person can't spell, but at least like, that they took it like it's them, and
but they can't spell.
Differentiation.
but both ways.
I'm raising money, but I can't spell.
So talking about Owwll, like, in fairness, like, what do you guys see as the future feature? You think that feature we should build? Do you think we should go text message as well? Because a lot of people ask for text, but we're an audio app. So I'm like, we just keep it a voice notes and no text. So it's all very authentic.
Right. Voice and video.
Voice and video. Yeah. Video we definitely want to do. I was cautious launching with video. I'll explain why. There was an app during the Clubhouse days that launched a video version of Clubhouse, and it completely failed. And he's a very successful entrepreneur, right? And it failed because you saw too much. Like, everyone imagine on Clubhouse when it was super successful during COVID, but imagine like people are on their trucks on video where they shouldn't be on video, and just seeing things you shouldn't. People doing things with drugs, and of course,
so security,
showing private parts, things of that nature.
That's another site.
So there's things that you wouldn't think with video when we're in a professional, app right here, but it could completely turn, a different direction quite quickly, and we could be shut down. Right? You could go to OnlyFans like that. Right? Like, ooh, I'll jack up my price and show you something. Right? So we wanted to get out to the market audio only, and I think in the future we will do that option where you, the expert, can go either or, and then that way, if you're in a car driving, you want to be on video, audio calls only. But if you're a plumber, how cool is this? Take calls, and you have an issue with plumbing, like, you can FaceTime me, and give me some tips on the fly.
Yeah.
So that would bring in the trades, of course.
I like that.
Right.
Yeah.
I would do that with a boat mechanic. When I had my boat, like, honestly, I would pay him $50 a minute just to tell me where to move the the switch to put the boat on. Right.
Yeah. Right.
Somebody call into this show. We have all these amazing.
What's going on here? Nobody's calling.
Here. They're not calling.
Oh my god.
We posted. I know it's this comes back to entrepreneurship. It's a holiday, so everyone's like, I don't work on a holiday. If you're a startup founder and you have investing questions or want to, that's she saw it, the writing on the wall.
Yeah.
Right?
I mean, founders work. All holidays. I've had to do stuff on Christmas. Not fun,
Well, if nobody else is going to pitch you through on the spot.
Okay.
Right. So Owwll's completely self-funded. Right. I bootstrapped this thing all the way. Right. And we're at a point where I'm working like 80, 70 hours one week. Some days next weekend, Saturday, Sunday, and then the following week, Saturday, come up like, you know, you have to work with a small team, right? We only have 1.5 employees. That's it. And then after that, there's developers. Those developers are overseas, so everything's done on Zooms, of course. And spent 4 years building out Owwll. You see today, and we have over 9,000 people on the app, and we have consistent downloads on a regular basis. So now I'm kind of stuck where, like, I don't want to raise $500,000, right? I want to raise $1 million. Everyone's like, oh, just put that problem, you know, everybody. But at the same time, I'm like, I really don't want to just. Okay, so I bring in $500,000. Great. So I could increase my developer size, you know, a little larger. We shrunk it recently after we built most of the core out, or I hire one more employee. And I'm like, that's not going to do it.
That's not going to move the needle.
So I have $5 million on my pitch deck. And then when I show people, they look at me like, you're crazy. You know, you don't have enough revenue. And I'm like, okay, I'm okay with being crazy because we have a lot of data. So I think sometimes I'm talking to the wrong audience, right? Because I see my competitors all have 10 million plus who have gone after this, and it's a grand slam if it works, of course, right? Because we're picking up revenue 30% per call, and then of course we have a premium account feature that's $10 per month. So then I'm kind of stuck in this, like, you know, I don't go to pitch competitions, don't have enough time, you know, to do all of what we're doing. Obviously, we're running the show Funding Fridays, we're doing Tech Tuesdays, I'm running the Shrimp Tank podcast, and I'm a financial advisor, right? So I have to service those clients as well. So I have to be very careful, of course, with raising capital.
Yeah.
I might have to sell that business upon raise, right? And that's why it's also 5 million. You know, if I'm going to get out of that business to be the full operator, you know, I understand, like, you know, things have to give.
What do you think if you were, let's just say you were to have the 5 million in the bank? How difficult would it be? I think the way you would move the needle on this is to hire some big influencer, like bigger than Alyssa, like, you know, like, I mean, real big. Yeah. All right. Well,
be a brand ambassador. No, we have 50, 60
yeah,
brand,
yeah.
we have 50, 60 brand ambassadors.
But if you look at, like, everybody, and I'm not saying this is a great example whatsoever, but when you look at FTX, they had Tom Brady involved. They had, you know, Mr. Wonderful, who, you know, I can't believe he made that investment. They had a lot of guys there who, it just feels as though that if you could lever in, because I think influencers are the new investment bankers, right? And I think if you could leverage a few influencers to do this, maybe, I don't know if Gary Vee would be appropriate, but someone, you know, to come in. I mean, for Gary Vee, maybe he's like, just talk about something, right? Make some money. I mean, I think that would really push the needle. It would give you, I think, your investor, not your investors, but I think it would, you know. And what I would do is, let's just say you choose Gary Vee. I'm like, okay, you write a check for $100,000. Come in. We're gonna you're gonna meet Gary Vee, right? This is yeah. I mean, I think this is the way it would work.
So let me piggyback that, because we've tried very hard to get a spokesperson for the brand, and this is great. Everyone's hearing. This is like raw of like what it's like to go after what you're talking about, how difficult it is to juggle all things at once. So we've gotten a lot of influencers on the brand itself, a lot of micros, they're brand ambassadors. We have 50, 60 of them, and then we have communities like Tech Hub, which then their communities could come on board. But to find a spokesperson with that much leverage, like we're thinking about people who speak at like the Aspire events, we have a very tight culture and a community. Maybe they'll have 3 to 10 million followers, but authentic followers that will listen, of course, and call in, you know, if they go available. So the problem is they always want money up front plus equity, right? Because their offers, like if I go up to Shaquille O'Neal, right, who runs,
he'll do anything for $100,000. I mean,
but the problem is then going back to like what we can afford. We are looking for an equity deal only, which could have huge multiple. It could be worth so much in the future, but they're like, heard that a million times.
Yeah.
We can't get to the table with those influencers you're speaking to, because they have a lot of people standing in the way, and say they just don't take those type of deals. They want money up front plus the other side,
and somebody else has to get paid on the way.
Yeah. So then I'm like, I can't afford $250,000 plus that where we are. So then I'm like, well, then raising capital, then doing that. But I'd like to try just going after giving equity, and then of course it's hard to form those deals. I have one actually, as we're speaking about, I won't say their name, but we do have someone that was quite big on the Aspire tour that has millions and millions of followers, and he's up there, right? And he's very connected to all those people like Gary Vee.
Yeah.
You know, and I hope it works out, and I hope I'm making the right decision. But you think on my end, giving equity away is completely game
Yeah.
to spokesperson as long as the metrics are there to that individual.
Mhm.
Kind of from your perspective.
I'll tell you this, and I don't know how I can help you, but I know someone maybe I can make an introduction to. So a year ago, I was my partner and I were invited out to Palo Alto for the Blitz Scaling Conference. Hoffman founded LinkedIn, and I have a photo of him, nice guy. He said one thing about AI, not to get off the subject. He said the AI you use today is the worst AI you'll ever use. And we were at Stanford and we were going through all of this. He would be probably like one of the guys maybe you'd want to talk to,
Of course.
to tee that up in the next couple of weeks with that. But Chris Ye is a friend of ours, and he's connected with that. There could be a good opportunity there if you just go. Thing can be kind of finicky, and I think you'd really have to manage them. And you need to find out what KPIs are that they're going to offer you for the buck. And I think some of these people, they're great influencers, but they're great marketers, but they're piss poor operators, right? And they don't know what's going on. And it's the same thing with, like, you have these great real estate operators, but they're bad marketers, right? And so if you look at the good marketers in real estate, they're usually disasters as operators. I'm not going to mention names, but you understand, why the families gravitate towards you and not some high profile person. We'll leave that out. But I think if you start going to that, where you start having the legitimacy, because just the reason why I like this, and again, I'm cynical at best and paranoid at worst, is that with LinkedIn, I know every time I get a LinkedIn request and they have like 5 different acronyms next to their name and a PhD, they're broke and looking for money. And this would, sort of, supplement their income. I mean, it's like, hey, I got service, like, you really want to pitch me? Okay, here, leave a voice note for $5 and,
What are the 50 or 60 brand ambassadors? How does that work with you?
Yeah. So our app, on the back end, we built in a percentage of the fee for the referrals. So really simple. If you're a brand ambassador and you refer Sal, right, then he's tied to you forever, right? And you get 5, 7, or 10% based on your level as a brand ambassador.
So it's a second tier affiliate program, like.
Yeah. So if you referred Sal and Sal spends $100, you can make $10. If he earns $100, you make 10. It goes on both directions, kind of like a real estate deal.
That's cool.
Yeah. And we have about 50, 60 of them. And they consistently refer people to the technology, so they get recurring revenue. And inevitably, we get large enough where we don't need more brand ambassadors. Of course, they're the lucky ones that have that special code that really works in perpetuity. Of course, they have to do certain conditions. They have to be available on the app X amount of time per week and do X amount of calls on the app per month. So it's very easy to measure the metrics on our platform, which goes back to, like, if we do a big deal with a spokesperson, well, it's simple. We can track how many hours they take calls, how many calls they take. And if they really did that, their following would come to speak with them, of course, as long as they posted, hey, I'm available on Owwll once or twice a month to take calls, for example.
I mean, in the most extreme circumstances, and that's how things get done today, because if you think about the process of blitzscaling, right? I mean, I read the book, it's a good book, but for you, blitzscaling is, I'm going to raise capital just to be able to put this in the right hands of right people, but to be able to do that, I'm going to have Tom Brady on the app.
Yeah. And I'm dying to get someone big. We have a lot of micro influencers, or we have influencers that they didn't use it. Like, they downloaded it and they didn't get past, like,
they're not your guys
or making a call. So we do have some pro athletes or past, athletes that are now in the Hall of Fame, or big time movie directors. Right. We have some on the app that have movies in the movie theater right now. Oop, nope. I thought someone was calling. It's just a timer.
I think you're onto it. I mean, honestly, time is money. Everything is financialized today. If you take, if there's flesh or, finance, it's just the way it is.
So I'm going to put all you guys on the spot then.
Yeah.
We're going to start with you, James. If you were in my shoes, knowing what I just told you, I have runway to just keep the app the way it is for a pretty long time, because I have money coming in from financial services, right? Mm-hmm. But I don't have more money to, like, increase the sales team and increase staff, right? But now, like, knowing that, obviously I could just keep it slow and keep seeing where it goes and get lucky. Or, like, what would you do if you were in my shoes?
I mean, I'd look at
what I just mentioned.
I'd look at your underwriting model and see, how long, I would sort of, like, plan it where, okay, so let's get another 6 months in or another year in where we're really building up the numbers, because then it's going to be easier to find somebody to be your spokesperson.
Okay.
Right. Yeah. And to your point, about the influencer thing, I think it is really important, but you have to bring value to them. Yes. Right. Like, if you're not paying them, there has to be some sort of element of exclusivity. right? I think Owwll Yoga is an amazing brand. They have a case study that's out there. I'm not sure. I would be very interested. I think they were just valued at $1 billion. So what Owwll Yoga does, I'm not sure if you guys are familiar, but
I see all the branding. Yeah.
right. But the way they started was they created an exclusive gym that is invite only and created this like ecosystem for influencers and actors to work out in. And it was a privilege to be invited. So I think in a members only exclusivity element would play really well into, building up the allure.
Okay.
But I would also, you have a really great student base, and I think those students, their perspective has a lot of value too.
Yeah.
They know what's on the up and coming and what's appealing. And they're using podcasting, voice notes. They're using all of that too. So I would definitely, tap into that audience as well to see.
I mean, honestly, if I could raise 5 million for you, I actually going to make some introductions to you for people who would be interested in this, but I think they would tell you the same thing. It's like, what's going to move the needle here? Can we get Joe Rogan for $1 million to talk about this? That changes everything for you, right?
Yes.
That changes for you everything.
But there's so many big spokespeople that could immediately.
But you need the money. I think that's the way to do it because we're in an influencer generation today.
Yeah.
Really, it is. I mean, Alyssa will do it for $500,000, maybe, but maybe. But you get
Call
some.
Joe for us. Call Joe for us.
I think you're onto something with this because people, and I like it because when I'm in LinkedIn all the time, and I have some people that help me with that. People are always wanting to get on a quick call, and it is emotionally draining. And I just avoid it like the plague. I tell people we're not allocating anymore right now, for the foreseeable future, because you're going to get hit over the head with a pitch.
Well, here's the trick that I speak about that. I do tutorials every week for the Owwll community. Is just have a message in your notepad on your phone, and when all the people connect with you on LinkedIn and you're about to hit accept, just beat it to them.
I've done it.
And literally I go, happy to connect. All my intro calls are done via the Owwll app. I'm available, once a week at this time at $20 for 10 minutes. If you want to speak to me, you can find me there. And then all of a sudden, what are they going to do? Like, here's my calendar. Like, no, I already gave you a link to talk to me. Yeah. Don't shove your calendar. Like, then it's AI.
Yeah.
They're not reading.
Yeah.
And then I go back like, I just gave you an opportunity to speak to me. Right. And then it gets funny because they're like, they just try to avoid and get free. And then you get all those tire kickers out of the way because sometimes you don't know. Sometimes they have an alphabet next to their name. Like, this person looks legitimate. But then you find out like, nope, they were just trying to take. So that works really well. And then when people just randomly message you, same thing. I just use that across the board and it works. And there is a lot of lurkers out there that are very valuable. As we all know, one of my largest clients is probably worth over $1 billion today. It was just a little office in Jamaica, Queens that I walked into. And I was like, why am I going to this meeting? In financial services, I'm like suit and tie. I was like 26, 27 years old. And you know what? Like, I just didn't judge. I just went. And then all of a sudden he's like, I'm worth 20 million. I'm like, yeah, right. And then all of a sudden it's like 50 million. And then all of a sudden I find out like, no, he owns the whole block in Jamaica, Queens. And it's names. It wasn't clicking. Like it was the name on the laundromat, the parking lot. And then all of a sudden, like the Hilton made him offer like $300 million to buy like one strip. So I could only imagine now he's worth $1 billion plus. He's in his 80s now, but it's just like, it's just like sometimes you don't know those lurkers on socials. It's lots of times those that don't send you a message. They connect with you on LinkedIn, but they're not sending you a message. But the second you message them, it gives them the opportunity, as a pathway to reach out. So maybe it is that little voice note that we add to our app that actually helps those folks as well. Because those lurkers, maybe they are willing to send a quick voice note for $10, to get an answer and then feel comfortable to jump on a call.
Yeah. I think, anything that has a higher barrier to entry is always going to be, most beneficial to people. And that's even with the networking events, right? Like, if you go to some of these conferences in Florida, they're free. They're full of service providers. They have a red Solo cup, and keg beer. And then you go to the ones like, with Korman I went to at Mar-a-Lago, there's like thousands of dollars a ticket, but the quality there is much better of the people you network with. And I've actually been able to meet some people. Thank you for bringing me and Connor to that. I appreciate that. That was
Thank you for bringing me here to this.
yes. I mean, this is fun, James. We got to do this more often. Maybe Alyssa too.
I would love to.
Yes.
Absolutely, would
All right.
love
Well,
that
we're
would-
doing these once a month, but who knows? Maybe we'll start going
we can do
twice
more,
a month. but
depending on the
This
traffic.
is Sal's show.
I know.
Right.
We can.
He's the
You
boss.
should do a van. You should do an owl van.
We should rent an owl van that
If
can
you guys
commute.
get us some funding,
Yeah.
we'll
Yeah,
create
yeah,
the out.
that's
That would
great.
be crazy.
I want one of
See,
those.
That's what I'm saying. Like I have so many ideas. Like if I had funding, I mean, Sal knows me.
Right,
I'm very
right.
out of the box with marketing, but it's a genius idea. Like why is no one podcasting in a van? Obviously, it's very
Right.
expensive, but it's not rocket
Get an
science.
Uber.
Like
Yeah.
all this equipment,
Yeah.
the equipment has gone down in price,
Right.
and now you do Wi-Fi on the road. So like, what is stopping you from doing what we're doing? Like putting this table in a van,
Yeah.
right, and just like showing up, at these big festivals and
Right.
grabbing influencers.
Oh yeah.
And like all of a sudden,
Yeah.
like you got content on the fly.
Exactly. Like free
Wow.
content.
I mean,
I like that.
I know someone who can do that for you. So we made an investment, and they actually got a huge investment from a overseas investor. And what they do is they set up labs for kids to, show their kicks, so they can show doing a series of exercises if they, where they rate in the world compared to the rest of the 600 million other soccer players.
Sure.
And I think if you have a traveling thing that goes around to like Coachella, like I mean, like
Yeah,
I mean,
bring it to them.
yeah,
Maybe
bring it to
bring it to
space,
them, people want convenience, right? They want speed to market and they want instant
course.
gratification. So if you can deliver that and build their brand, I think there's
Well,
your-
with it kind of ties back to Owwll in a weird way, because like everyone says like, oh, your app could be great at Emerge Americas, because everyone then connects on LinkedIn and Instagram, but then no one ever talks. Right. And it's a pain in the butt because you're not connecting. You got to wait, where we're instant. So
Yeah.
at some point, like we could connect with these larger events,
right.
have that van outside. Everyone gets the brand
Yeah.
awareness, but like, hey, send me a voice note through Owwll, or call
Right.
me on Owwll. So we do think there's a missing component to the Owwll app, which many
Right.
use,
yeah,
where it's great during the convention,
yeah,
but it's horrible 2 weeks later. It's
yeah.
done.
Nobody
It's
uses
toast.
that.
And then everyone goes back to LinkedIn and Instagram, and people get a little frustrated in our circles.
Right.
We're like, wouldn't it just be easier to like get through the fluff through a small price? So I think we are onto something with that minivan.
Right.
I was at a conference last week in Palm Beach, and there was this one guy. He's an equity hedge fund manager, and he's nice, but he's kind of crazy, and he has diarrhea mouth. And I told this story yesterday on a call, and I met him before, and I remember the person who Andrea was like, "You met him before?" I'm like, "Yeah." He's like, he goes on, and he wouldn't shut up. Like, "Oh, in 1977, I did this." I'm like, "Okay, dude, like it's 2025 today. Can you bring it?"
Sure.
And then it was impossible for him to get my contact information into his phone. And if I just forwarded him the Owwll app, that would
Yep.
be great. That would just cut it right there in the bud.
Imagine how many minutes you would get.
Oh yeah, I mean that guy would just talk forever. Like it's just,
$1,000.
geez.
And also, females don't have to get out their phone number. Like, there's
Yeah,
a nice
that's the
component.
other
Like,
thing
how many guys come
too.
on and be like, "Hey,
Right,
can I grab
right.
your phone
Security.
number?" And
No,
you're
and I
networking. You're like,
was
"Is this networking or is it dating?"
LinkedIn.
Yeah.
And you're in an
yeah.
awkward position now.
Yeah.
Now it's professional to give your
Right.
Owwll. Now we're not large enough where,
Right.
because like what's Owwll, then you got to explain
Yeah.
it. But as we get larger and we have a big spokesperson, then all of a sudden like, "Oh yeah, just hit me up on Owwll."
Definitely.
Right. And then females absolutely love that component. And then of course then it brings in, a whole dating component too. Like we've had
Yeah.
people date after
That's so
talking on
funny.
Owwll.
Really?
So,
Yeah, no different than LinkedIn.
Yeah.
It starts with a phone call and like, "Hey, we should meet up for drinks."
Right.
And that could be a whole skin of our app,
Yeah, Netflix.
a whole dating app
can work with
where you
Netflix.
call people and actually not just swipe. Right. And people have said like, you could turn this to a dating technology.
Right.
I mean, all roads lead to that at some point, right?
Is that where we're going?
I think so.
We're
I think-
dating, and then all of a sudden we're going to OnlyFans. This is,
Yeah.
everyone said that to us too.
yeah, it's like you have LinkedIn, you have Instagram, and your OnlyFans and your Twitter, right? I mean, that's where it comes down to. But remember, people are lonely, and if they naturally have something in common with someone that they're talking to, that's what's gonna, that's gonna spark interest, right?
Yes.
It's
Okay, so
amazing.
take us home, Sal. It's 1:00.
We've had a great
We've had
time
a
today.
great show.
Jason, I think this is a great show. We had the Honorable Professor Walter O'Leary here, who's doing deals right now. We were joined by James Korman, the Honorable James Korman from Philadelphia, good friend and also very close friend and advisor over here, Alyssa DeMartino. Thank you.
Thank you.
Thank you guys for coming. I
having us.
appreciate it. This has been a great Good Friday. We're going to get some lunch now. I've heard some people's stomachs rumbling here during this call, so we're gonna get some food in our stomachs. I appreciate it. Jason,
Yes.
thank you so much. And
For
thank you, everybody,
sure.
for
Thank
tuning
you,
in.
everybody, for
The Owwll
tuning
app.
in. And of
Viewers.
course, this is the launch of Funding Fridays. So every Friday on the Owwll app, we will list this category up at the top. And you see Sal there. There's Walter as an example. James, Alyssa's up there as well. So make sure, just hit the follow button on people's profiles like that. And then every Friday, this group's gonna scale, right? As we have more venture capitalists, angel investors, private equity folks finding out about Funding Fridays. And also, I've already just sent this actually yesterday to South Florida Tech Hub, the Levan Center of Innovation, FAU Tech Runway, FAU Research Park. As they start telling all their networks about this, naturally, we're going to start seeing the demand kind of rise. So I'm hoping next month when we run Funding Fridays, the phone just doesn't stop ringing.
Yeah.
Right. Because now everyone knows about it and sees Owwll as this platform to connect with investors and really the right people. Then they can read people's profiles, and you're not just getting random messages on LinkedIn with pitch decks, right? It's like more like they could read things, they could see your mission.
It's the logical progression. It really
Absolutely.
is.
Right.
So thanks for joining us.
Thank
In Boca
you.
Raton, Owwll HQ, everybody listening. Take care. See you on the Owwll app. Take care.
Happy Easter, y'all.
Bye.
I love it. All right, cool. That was